Let's start with a number, $110 billion. Just let that sink in for a second. That's how massive Bangladesh's annual trade ecosystem is. It's a true powerhouse of commerce, driven largely by that huge ready-made garment industry. It's supposed to be this incredible engine of growth and national pride.
But, and this is a huge but, hidden deep inside that massive flow of goods and money, there's a really dark secret. We're talking about a sophisticated criminal enterprise that's been using the very tools of trade, invoices, shipping containers, letters of credit, to literally bleed the country dry.
So, how did this happen? How did a series of incredibly audacious heists manage to drain billions from a growing economy? And, maybe more importantly, who pulled them off? Well, in this explainer, we're going to break down exactly how a handful of powerful groups pulled off a financial heist that grew and evolved over an entire decade, leading to one of the biggest banking crises in the nation's history. So yeah, let's dive in.
Okay, so before we go any further, we need to get our heads around one key term: trade-based money laundering, or TBML for short. Now, put simply, think of it like this. It's using the massive, complicated system of international trade as a giant washing machine for dirty money. You can overprice something you're importing to secretly send extra cash out. You could underprice your exports to keep money stashed overseas. Or, and this is a wild one, you can just pretend to ship goods that don't even exist. It's a crime that hides in plain sight, just buried under mountains and mountains of paperwork.
All right, Act I, the blueprint. We're going to start our story around 2010. See, the first wave of these heists, it was almost elegant in its simplicity. This wasn't about super complex computer hacking or anything like that. Nope, it was all about mastering the art of the fake document.
And the absolute textbook example of this whole approach has to be the infamous Hallmark Sonali Bank scandal. I mean, this wasn't just a fraud, it really was the blueprint, the one that would get copied and tweaked and refined for years.
So how did it work? It's actually shockingly simple when you break it down. The Hallmark Group set up this whole network of shell companies, paper companies that don't really do anything. Then they got a branch of the state-owned Sonali Bank to issue official letters of credit, but for goods that never ever existed. They basically turned a legitimate tool of trade finance into their own personal ATM, just withdrawing hundreds of millions of dollars.
So you have to be asking, how on earth could this happen? Well, this wasn't just a simple mistake or some oversight. No, this was a complete and total system failure. The bank didn't check if the companies were real, they didn't bother to check if the goods were real. And why not? Because the bank's own leadership, right up to the managing director, was in on it. They were actively helping them. There was just no system in place to flag something as basic as an invoice for stuff that didn't exist.
And you know what happens with a good, or in this case bad, idea? It spreads. This blueprint basically went viral. A company called the Bismillah Group, a towel exporter, saw what Hallmark did and took it to the next level. They created fake export contracts to phantom buyers that controlled overseas. And then, get this, they got financing from not one, but 5 different banks, all for the exact same non-existent shipment. And it worked. Why? Because the banks simply weren't talking to each other. So you see the pattern here, right? These early heists were all about tricking the system with fake paper. But the criminals, they were learning, they were evolving. They realized that fooling some clerk at a bank branch, that's small time. If they wanted to really scale up their operations, they had to stop just tricking the system and start controlling it.
And that brings us to Act 2, the inside job. This is where things get even more dangerous. The criminals have evolved. They've gone from being outsiders trying to trick the system to becoming insiders who control the whole thing from the top down. We're entering the era of what's called institutional capture.
The new ground zero for this kind of activity became another huge state-owned bank, Janata Bank. And here, powerful groups like the Crescent Group and the Anatex Group, well, they weren't just clients anymore. No, for all intents and purposes, they were the bank.
Just to give you a sense of the level of control we're talking about, look at this number, 98%. At its peak, one single corporate branch of Janata Bank had given a staggering 98% of its entire loan portfolio to just one client, the Crescent Group. Think about that. One company effectively owned that entire branch's balance sheet. And once you control the bank, the whole playbook changes. The Crescent Group got loans against fake leather exports, and then used those same fake documents to illegally claim government subsidies. The Anatex Group literally forced Janata Bank to break its own rules, lending them way more than the legal limit. And over at Basic Bank, it was even more blatant. Insiders and clients just worked together to siphon out the equivalent of over $500 million. This kind of internal rot also became the perfect gateway for moving money out of the country. Take the AB Bank scandal. There, senior officials just created fictitious offshore loans and used them to send millions of dollars to their own shell companies in places like Dubai and Singapore. The inside job had officially gone global.
Okay, so now we're entering the final and honestly the most devastating act of this whole saga, the end game. The criminals have now graduated from faking paperwork and controlling branches to capturing entire institutions. At this point, the banking system itself becomes a weapon for systemic capital flight on a scale that is just unprecedented.
And the S. Allen Group really perfected this model. It's a terrifyingly effective four-step process. Step 1, you get your people onto a bank's board of directors. Step 2, you manipulate the internal banking software to just bypass any lending limits. Step 3, use a huge network of fake companies to apply for enormous loans. And Step 4, you funnel all that cash offshore. It's a complete takeover, from the boardroom right down to the server room.
The NASA Group case shows the ultimate conflict of interest. I mean, Nazrul Islam Mazumdar, he was the chairman of Exim Bank, and he used that very position to approve nearly $2 billion in fraudulent loans and letters of credit for his own shell companies. The person who's supposed to be guarding the vault was just handing himself the keys.
And the methods just got more and more sophisticated. The Beximco Group was actually doing legitimate exports, but the payments from buyers illegally diverted to an account in Dubai instead of coming back home. And then there's this identity theft fraud, which is just awful. Criminals were literally stealing the IDs of poor villagers, using them to open accounts to import high-tax items like liquor while declaring them as duty-free machinery.
So, the economic fallout, because let's be real, billions of dollars don't just vanish without leaving a mark. The cumulative effect of all these heists was absolutely catastrophic for the entire Bangladeshi economy, and it had very real-world consequences for millions of ordinary people.
Just look at this chart. It pretty much tells the whole story in 2 bars. In 2021, Bangladesh's foreign reserves were at a healthy $40 billion. Fast forward to early 2025, and they've been cut in half, slashed. A huge portion of that drain was capital flight, money laundered right out of the country, disguised as payments for fake or overpriced imports.
And if you're wondering how that actually affects people, well, here's how it hits home. That massive shortage of US dollars, it caused the local currency to devalue, which then sent inflation soaring to almost 10%. And that means the cost of everything, from food to fuel, went up for ordinary citizens. A direct, painful consequence of the money being siphoned away. After a decade of crisis, the scale of the problem was just undeniable, and the pressure to do something became immense. And this forced a long overdue evolution in the country's defenses. So, is there a new digital defense? Well, the response did build over time. The 2012 Prevention Act created the legal tools. A 2019 circular forced banks to set up dedicated monitoring units. But the real potential game changer? That came in 2024. A digital system linking the tax authority and the central bank in real time, designed to close the exact loophole that allowed that first wave of frauds to happen. And that really brings us to our final critical question. The fight has clearly shifted to a new digital battlefield. Automated systems can now cross-reference invoices and shipping data in seconds. But, as we've seen, these heists evolved from simple forgeries to the complete capture of financial institutions. So, can a technical fix truly solve a problem that is ultimately driven by insider collusion, political influence, and old-fashioned human greed? Now that is the billion-dollar question that will determine the future of Bangladesh's economy.